Hello, everyone. Welcome. This is Kevin Richards of ChairmanQuest.com, and I'll be going through today weekly analysis of a few charts, various currency pairs. Starting off with gold, I'll probably look at the GBPUSD, US 30, and maybe a few others. Now, before we get into the presentation, I wanted to point out to you guys that I'm going to be doing a markup. And what we have here is the um, gold to USD currency pair. Now, for each level, support and resistance level in marking up the chart, I will use my horizontal freehand line um, to mark off the key levels which we need to be observing. And these levels will give you points of entry and exit for the week. And it will give you a basic understanding of where to be keenly looking for your entries during various sessions: New York, Asia, and London. No, currently the market is closed and price stopped at 1783.4 for the gold. And what we want to do now is um, I'm gonna take a few lines close as possible to where price had stopped in the market last week. So, um, so for example, each point that it does a turn, like this point here at the top, this point, this point, this point, and the lower points as well, turning points. These are the key levels that we need to be paying close attention to, guys. So, let me have our lines. Uh, that's one there, um, right? I could put it a little bit closer to the top. Um, I want to try to get the levels as close as possible to where we currently are, because um, if we look carefully, we can see that gold is currently in a downtrend now on the weekly, and it's showing signs that price should go below um, 1780 for next week, because we can see that the line actually broke below this level, which is considered to be an acceptance of key level. Hence, we should expect it to go a little bit down more. So I'm going to be putting extra lines at the key levels that we need to be observing. That's two, three. Here's another one. The base of this candle here. Um, and another here. Um, so I'll try to mark up as many support and resistance levels as possible. And then we'll drill down to a smaller time frame like the 4 hour to see what's going on the smaller picture side. All right. All right. So basically, if I do a zoom in now, we look to the right, we can see a few potential prices that we should be paying close attention to, um, like 1743, 1728, 1861, 1671. There is another level that I wanted to get, the level that we hit this week, which is about somewhere here. If I zoom in and go to the left, it will be visible on this side. Sometimes we have to zoom in because based on the highs that we won't have any information to our immediate left. So we have to zoom in to get the past key levels to the left. All right, so this week we had a level ending here, right? So it was in alignment with this top here, this top. And if we zoom out and go back, we'll see, um, right, there you go. Right, so price came down close to the 1760 zone, which we marked up for last week. Now, for this upcoming week, what we are projecting, every week, what the market would usually do is a pullback to a previous high, and then it will continue downward. So um, basically, if we go to the 4-hour charts, right, and zoom in, our lines will still be there to give us a picture on this smaller scale. So right, so basically for last week, last 2 weeks, we had a run from this line. If you notice, guys, the tip of the wick actually touches the marked up line that we did, because these are strong levels of support and resistance. So this shows you exactly where you need to enter and exactly where you need to exit. It goes down to the key points. All right, so for this upcoming week, my expectation is that the market should go back to some of these key points. Um, Let me get a line here. This is where the market ended last week. So this is actually a strong key level, 1760.4. Um, so for the upcoming week on the 4-hour, I'm gonna mark up a few levels, the turning points. There's one here. Um, there's one here. And as you know, guys, the 4-hour is a little bit more condensed. So we'll be able to get more razor sharp levels than on the weekly. The weekly gives us a larger perspective. Um, so for this upcoming week, we can be looking at one of these lines as a potential pullback point where the market will start selling again. Um, all right, so there we go, 1826, 1830, up to 1845. There is a nice one here at um, about here. That's 1836. All right. So this is the 1836 is the one that I am keenly watching this week. Um, the the gold chart. What I've discovered with gold is that it's divided into units of 20s. So um, the checkpoints, as I call them, or major decision levels for gold, is usually in units of 20. So at 1700 and 1720, 1740, 1760, 1780, etc. Because if you notice this week, it ended at 1760, right? And at the top here, it started at 18, around roughly 1860. So each time it comes to a unit like 20 levels below, it makes a decision. So when the candle surpasses 1840, it's saying to you that it wants to go to at least 1820 next. And each time it crosses a line 20 units below, it wants to go to the next level. But when it comes to a 20 level and rejects it, like in this case, there's a candle here. This is like a hammer with the doji not touching the line. It's at like at the tip of the line, the 60 line. That is telling you that it rejected the key level and it wants to go back up. So it actually penetrated the 1780, sorry. That's telling us that it wants to go up to 1800 next. If it crosses 1800, then it wants to go to 1820, and it keeps doing that until it rejects. So it will not cross the line. It will touch it with the tip of the wick or close a little bit below it. That's a very important nugget that you guys can bear in mind and take notes. All right, so for this upcoming week, we are anticipating price to, as you can see, the highs are getting lower. So the previous week, we had the highs at above 1860, then it's above down to 1840, and then it went down to 1820 zone. This week, it can do an overshoot and probably close a little bit below 1810 thereabout, or within the 1820 zone. Somewhere in that region, I'm anticipating for it to retrace and then extend possibly to one of these levels. It can end the week at, I estimate, between 1743 to 1754. All right, guys. So that's how you would assess the week. You can do an estimate. And another thing that I use, which is a great tool to tell you, to give you a good idea of where price will hit. It's a tool called the Fibonacci. One of these days, I'll do a short presentation on it, how to actually do your Fibonacci calculations to estimate where your entries and exits are for the upcoming week. And this is particularly for swing trading because in a scenario like this, we'll be holding the trades for at least several days until our targets are hit. So next up, I wanted to look at the GBPUSD. And guys, we can clearly see that the GBP is an uptrend, right? And marking up the charts at the different various levels, we'll get a level here, another level here. And these are the key prices that we need to be paying attention to. What I've discovered with GBP US, it is divided into units of hundreds to make its decision. So for example, we have 3800 followed by 39, then 1.4, etc. Each time it gets to one of these critical numbers, these prices, we need to pay attention to see whether price went above or below it to know if it's going to progress further up or if it's going to reverse. So for GBP US, you're looking at like 3600, 1.3700, 1.380, 1.390, and so on. All right. So we can see we have a clear uptrend, and the price keeps pulling back very shallow within proximity of the key checkpoints, 1.37, then a little bit below 1.38, a little below 1.39. It's at 1.4 now, so we expect price to pull back slightly below 1.4 and then it will go up. So um, I'm anticipating for next week that we should be somewhere above 1.41 ending the week. So for this week, the week started off by pulling back to this point, and as you can see, it is in alignment with a previous high. This is a past resistance. It has now become a future support. So, for example, this upcoming week, we can anticipate the pullback to probably come back to this past resistance as well, somewhere in this region, right? Sometimes it can even overshoot a little bit below. All right, so these markup lines are very powerful for giving you your entries because the charts would usually pull back to previous highs or previous lows. All right, so when it gets to these points, you can look for a decision candle. Um, in this case, when price got back to this line, this level of resistance, we can see it gave a hammer and gave a few dojis. These are decisions by decision candle, um, and we had a bearish candle and a bullish engulfment, which signified that the bulls were still dominant. The bulls were in charge, and then the market went up. So that is how you would look for your entries. Like these are very strong lines um, where you can look to get very good results in terms of your entries. For example, look at this pullback. Um, this level of resistance, market came back to the line, and then we had a bearish candle that engulfed, which means engulf means it's actually bigger than the previous last two cells. So if one buy is greater than two cells, this is telling you that the buyers are stronger. And if you entered at this point, then boom, you would have made a few pips going up. This is at least 20 to 30 pips up, right? So this week, I'm expecting price to come back to at least this level or even a little bit lower. It could even possibly come back to this top, any one of these two, and then it would go up to the next checkpoint about 1.41. All right, so um, let's head on to the weekly chart, and yeah, there you go. We can see that the uptrend is really strong. However, I expect a major pullback anytime soon. What we do is look to our left, and any one of these levels uh, at the top would be potentially where we'd be looking out for a major sell move, because a lot of selling activity in the past here reflects potentially heavy selling in the future when it gets back to this point. So any one of these two lines on the weekly, the price 1.4143, 1.4240, those are two very strong levels of resistance. So we need to pay attention when price gets to those levels to see if we are getting any sell signals, and that would give us an opportunity to get a good sell run. All right, so I hope this helped. Um, I will go through a few more charts in the days ahead and give you guys a breakdown on the Fibonacci, on different tools, different strategies, and how I figure out my entries and exits in the market on a weekly basis. So, Kevin Richards of Epic Trading, um, feel free to reach out. My website is chairmanquest.com. If you want to learn more, if you want to become a part of the team, the dream team, where we share, we learn, we grow, then hit me up on the contact us page, at GermanQuest.com. Thanks, guys. And that's it for today's training session.